Well, Madhusudan Kela now joins us to talk about what we should expect from tomorrow's budget, from the economy this year, and from stock markets, which for the moment are showing signs of inertia and comeback. So, Madhu, we are talking to you a day before budget, but what would you like to start with? The year, the month gone by, or tomorrow's event, which is budget?
I think, as we are seeing, budgets are becoming less and less relevant because throughout the year, there is something or the other which the government has been doing from an economic perspective. So one important thing which I would like to talk, Nikunj, because there is a lot of debate which is going on as to why the economy is slowed down 4%, 4.5%, 5%. People are giving any number. So in my mind, what is less appreciated fact is the flow of credit into the economy. And this NBFC and HFC sector and some aggressive private banks like Yes Bank and other private sector banks and mutual fund all put together were putting in a lot of debt money into sectors which were really in need of that kind of money. So if you look at year-on-year basis, these numbers, pre-ILFS, what the number was, what was the growth which happened pre-ILFS year after year. So incremental growth from the NBFC sector was anywhere between 2.5 lakh crore rupees. So then you will be able to appreciate why the economy is slowing down. It is roughly 2 to 3% of the GDP which would have gone as a credit in the markets is not going. The other thing, you may make an argument that on an aggregate basis, the situation is not that bad. Yes, it may not be that bad, but Bajaj Finance is financing people for 6-9 months and they are doing consumer loans, while the need of the hour is developer loan or need of the hour is the industry loan, which impacts the economy much greater than what the loan of Bajaj Finance can do for the economy as a whole. So I am saying, whether it is today's event or whether after 2 months, this is one single most thing which personally I would like to focus, how that confidence is coming back and how the credit flow is improving into sectors where it is important.
Fair point. Okay.
Again, if you, I just add one more thing. You had a big tax, fantastic reform, very, very good. But it has gone to whom? It has gone to companies which did not need that kind of money. It has not gone to people or sectors where there is need is there. So that will do good, but it will do its own kind of good. But it is not stopping the bad on the state sectors.
Okay. Now let's address all the factors one by one. First, there is one caffeine and then there is green tea. I say caffeine is immediate relief. Green tea is something which is structural and detoxes you.
Sure.
So in this budget, what should be that caffeine shot which will, take the economy higher? And what do you think should be the green tea approach where you can detox and clean the system and make some structural changes?
So Nikunj, what informally I also learned, the government is being very proactive. What I learned from my corporate friends, that a lot of industrialists have met Prime Minister himself and he has met a number of people. So there is a clear-cut recognition, and you and I know by our 30-year experience that the only way to solve problem is focus on growth. Because if you have growth, then a lot of these factors will get marginalized, what we are talking of today. Now, how do you build the growth? So as I tell, what I would like to watch in this budget, what is it which you are doing to boost up the confidence? Because see, it is such a paradox that 4 lakh crore rupees is being parked with the government, by the banks, with RBI, and there is no taker for that. And on the other hand, you have stress for companies that they cannot borrow. So the sector which need the liquidity, the entrepreneurs which is where liquidity is needed, even though they may also have their credit rating might be questionable, but they have enough security to give, but they are not getting the money. So I would like to watch what is it which the government will do in this budget to boost up that confidence so that people are once again willing to borrow money and put up the capex, spend money for productive purposes. So that is one single most thing. Can we be convinced that this is going that? Then typically in a budget you watch what will be fiscal deficit number. So I think this time, at least from a capital market perspective, people have more or less reconciled that whether the number is, it can't be 3.3. Even by arithmetic, it can't be 3.3 because you are assuming 2.11 lakh crore rupees of economy and actual economy is only 2.04 lakhs. So only by the arithmetic that will go to 3.45 for last year. Then there will be some addition. So whether it is 3.7, 8 or 9, I don't think market will be perturbed. Now next year number, whatever you say, people will definitely want to see the arithmetic of how that number is arrived at. So I am watching for two things. One, what happens to telecom provisions for the next year. Second, the government got 1.75 lakh crores from RBI this year. What happens to that number? What is the assumption which you are going to take on that number? And third, what are your growth broad assumption? I think we have seen in the NDA government, in Modi ji's regime, even in Gujarat, I do not think they will go absolute haywire as far as fiscal is concerned. So that will be under the check. So that's the second thing which you watch in the budget. Third, from a capital market perspective, which is most important, I think market is watching for three things. One, what happens to dividend distribution tax? Now again, there is a lot of talk that dividend distribution tax from the company may be removed and it will be taxed to individuals. But if it is taxed at a real rate, then it may not be that positive. But if that taxation is curtailed for individuals, what it is today, which is like 14% maximum dividend tax, then it will be quite positive for the market. Second, if you remove dividend distribution tax, do you also do away with the buyback tax? So that's the second point. Third, what happens to our favorite topic of long-term capital gains? So I think these are the three things which people are watching from a capital market perspective.
Over the years, you always said, don't look at the news. Try and figure out how much of the good news or bad news is in the price.
Sure.
If one works with an assumption that this year's budget would be reasonable on all accounts, both in terms of assumptions and understanding the need of the economy, do you think markets, after the recent run-up and the fact that mid and small cap stocks on an average are up 8 to 10% from the recent lows, 30 to 40% in some cases, are markets factoring in a good, reasonable and a smart budget?
I think the undertone is that there is a lot of belief that the government will do comprehensive action to revive growth. That is for sure there. Now, I don't know how much of that can be done because growth reviving is not an event, it is a process. Let's understand it, that it can't be achieved in an event. It's not like yes or no. But this can signal what kind of intent the government has. To that extent, it is very important. Nikunj, you know, let's segregate this market. A lot of people have this paradox. On one hand, GDP at a 42-quarter low, inflation high, why the markets are going up. So we need to understand this. Many people have come and explained that these are only 10 stocks which are contributing. My theory is that you have to look at bear market survivors. So last 3-4 years have been very tough for mid-cap, small-cap companies in a lot of sectors. But still there are a lot of companies which have survived through this phase. They have not got into any regulatory challenges. They have not spoiled their personal and the company's balance sheet. And plus they are in reasonable businesses. I think these people have a huge runaway. Second, you also have to appreciate that if they were aggregate, there are 100 players in India which were servicing a particular industry. In my opinion, at least 30, 40, 50% of them have gone into ICU or coma, or they've gone out of the business.
Maybe more in case of real estate.
Maybe more. That's what I'm saying. So that means, and the demand has not contracted that much. Let's accept that as well. So if the size of the opportunity was 100, and if 100 people were servicing this, maybe the size of the opportunity has come down from 100 to 95, but it's certainly not come down to 50. So to that extent, whoever has survived, they are doing well, which is why you see in a real stress sector like real estate, you have the leader almost double in his stock price. This is my precise point. So, you know, if I'm in a stock market, I have two choices. One, I can keep looking at number, government is not doing that, this is not happening, that is not happening. I don't think I'm in that mode. I think, you know, whatever is there, there is tremendous opportunity. You just do your bottom-up stock picking, you have conviction, you do your homework properly, and there is money to be made.
When we met last time, about 7-8 months ago, your words were, I'm getting ready, Nikunj.
Yes.
I'm getting ready because this market is looking attractive to me.
Absolutely.
I hunt in the mid and the small cap space, and that's where I find value.
Absolutely.
And markets, maybe a coincidence or your assessment, they bottomed out.
Yeah.
First mid-cap stocks, they stopped
I'm
falling.
telling you, you are saying 30-40%. I can give you 50 examples where money is doubled in last 4 to 6 months. 50,
That
which is very nice.
Yeah.
I'm just saying, which is what my, let's say, somewhat conviction was. Because as you rightly said, there are times when market absorbs all the bad news. Then whatever bad news comes in, because the share price has already reflected that bad news, at that time then it's a buying opportunity, because you will never have good news and good price. You will always have good news, bad price, bad news, good price.
So what is the frame of the mind right now? Because news has improved and prices have also improved.
Yes.
So news is not great and prices are also not great.
So I am saying no, prices are still great, because just because something has gone up 30%, because it fell from, let's say, 100 to 30, and 30 has become 40. So it has gone up 40, but it is from 100. It is still 40. So I still see it is not as screaming as it used to be when I spoke to you 7 months back. But I still feel that there are opportunities in the marketplace in various industries on a bottom-up stock picking basis. But we have to be more disciplined. See, abhi kya hai Nikunj? It is not like old time. Abhi nazar hati, ye durghatna ghati. But this is what all of us have learned in the last 2-3 years. Markets are very fast. They seem to be unpardonable. You know, absolutely. If you have not done your homework, it's spanky clean. And you just go in and something wrong goes, you know, your stock can fall 30, 40, 50%. So as the markets are rising, of course, you have to increase your intensity of work. But I can clearly see lots of opportunities even now.
You always said that for investing you need an edge.
Yeah.
Some years ago it was information, then it was behavior, then it is analysis. How would you define your edge? What is Madhu Kela's edge in this market, and what do you think an investor's edge should be at a time when information is freely available?
So it's a beautiful question, possibly the best time we asked. We have to every day question ourselves, why will I be better than anyone else? So the way I look at it, one, the passion. You know, that is my edge, I would say. That I am, 51-year-old, but I am still as passionate when I got into market when I was 22. And that does a lot of work. B, I think I have the humility to accept that I can be wrong, and I have been wrong, and correct myself. And that is very important. C, now you know that, there is no shortcut to hard work. There is no shortcut to detailed working. You have to be absolutely detailed. You have to be absolutely on the ball. You have to be absolutely understanding the companies which you are buying. So these are the three things. If you put them all together and wait, then the other thing is that, we have learned now to wait for a loose ball. No one has told you to hit a 6 in every ball. And market throws the loose ball on its own. You don't have to do anything. Like a bowler, when he gets tired, he'll give you a loose ball. And that time you have to hit a 6. But the question is that, did you get a loose ball and did you make 1 run? Or did you get a loose ball and you really hit it for a 6? And you waited for the loose ball. As the markets have amply proven in the last 4-6 months that the loose balls come in.
Great point. You always say that I look at the big profit pool. The big profit pool, buy a company which has an edge, either cost edge or a scale edge. Where do you think earning migration in India will happen? And just for the benefit of our viewers, the question what I'm trying to address with you is that 1980s was all about steel and cement. Then came TMT. Then came pharma and consumption. We always say that horses change, courses remain the same. In this decade, where do you think there is going to be high growth earnings?
I think for the decade we'll have another interview. It's difficult to address that question. But I would say that last time when we spoke, I'm still, again, put all disclaimers possible. I'm not recommending any sector or company to buy. I'm saying I clearly see a lot of opportunity in the pharma sector. Because if you see, the pharma index has not done well. The larger companies have not done well. There have been a lot of regulatory issues, and those issues have been around for 5 years, roughly. And earnings have improved. The cash flows of these companies have improved. Second-tier companies, I have seen them cheapest in my career. In the last 25, 30 years of me tracking companies, pharma companies, on an absolute basis are cheapest according to me. Mid-sized companies. So there is, and plus this is definitely a more defensive business as compared with, now again, there will be a noise. Now there is some corona flu in China, some disruption in raw material supply happens, and 1 or 2 quarter results are not good. Maybe stock will fall, but that's a buying opportunity. It's not an opportunity to be worried about.
So from a market standpoint, a short-term dominated question, what's happening with corona is sad.
Yeah.
It's a pandemic. But in terms of an economic impact, do you think we should not read too much into it?
I would say the only difference between past academics and this one, this time the governments are far more prepared. And from day one, they are acting very, very aggressively to curtail it. And that gives me a confidence that it will not be a major setback. Because, you see, when did you hear a Chinese premier come on media and say that's a crisis? You go back in 2003 when SARS happened. I think it has taken many months for the governments to actually recognize it, or WHO to recognize that it's a academic. Even in the 10th or 15th day of outbreak, it has become a serious issue. I think there will be some solution. The technology edge in which we live, if the governments are determined that they need to control something, there will be some solution. As always, I remain optimistic. So
I was just scanning a list of stocks of great compounders for last couple of years. Interesting names are there, from an Bata to an Bajaj Finance, from an Relaxo to an Asian Paints. What is the future for some of these so-called niche stroke consumption players? Because if India has to grow, consumption will grow. Some experts would say, look, it's a good company, it's expensive. What is the right way to look at these businesses?
So Nikunj, I'm in that camp only because I don't understand this very, very high valuation and concentration of all investors in these quality names. So I'm not saying there is no opportunity. There will still be select companies. And these are very, very strong franchises and they should be part of your portfolio. At least some names should definitely be part of your portfolio. But having said that, is it a time to go whole hog and buy just because it's a quality? My style of investing does not permit that.
Is value investing dead because ITC, NTPC, a lot of classic value stocks have been languishing? Do you think it's a flow of the money which is making us ask these basic questions? Value investing will come back?
But it always happens, Nikunj. Whenever there is exaggeration which will happen, like if you go back in 2008, all infra companies were trading at 20 PE multiples. So the 2002 and 2008 was real dream for all these companies. And last decade has been belong to quality. And you will see over a period of time, as the earnings pick up in the other basket, somehow start. And when you are an institutional investor, which I was, there is a tremendous, you can't just say that you will do the right thing. You have to also recognize what is market telling you. So today, if I am a fund manager, if these top 10 companies are doing well, and if I apply my mind too much and say that just because they are expensive and if I am not here, I may just entirely lose my fund money because this game is all relative. So till the time there is a real underperformance which starts to happen on these names, I don't think there will be a major shift. But once that shift starts to happen, then it will happen in a major way.
So, for those who've written off steel, cement and infra names, they could be in for a surprise because these stocks will eventually come back?
I think some of them will come back, for sure. And a lot of new sectors will come back. Let's not deny that. There are so many good companies which got listed in last 6-12 months and after listing also, IRCTC, for example. These are names which have done well. So we have to, what I'm saying is, Nikunj, let us be bottom up. Let us focus on companies. I think you will find companies in all themes. You have to just be unbiased and do your homework properly. That's my message.
Madhu Kela rarely comes on TV. When he comes, he is expected to say something interesting. Last time when you give this very convinced and authoritative answer that it's time to take a risk. Now somebody saw that interview and said, okay, he's making sense, but I did not act on it. This time when he's speaking, I want to act on it. So what would be your actionable advice for long-term investors?
My actionable advice is that don't, segregate the noise versus your action. If you're watching television all the time, you're just getting under a noise, then you will not be a good investor. Let that noise happen. And we are very, very intelligent people to take care of the country. We have to take care of ourselves. And how we can take care of ourselves is by focusing on the job which is being assigned to me. So I am saying, just do, if you are an investor who wants to invest in equity, just do your work, bottom-up work. There are plenty of opportunities in this market. If you don't understand this, then give it to a very good, proper professional manager who has a track record. And I don't think 6 months is a period to feel that I lost out. This opportunity is a perpetual opportunity. Names will keep changing, the industries will keep changing. Your conviction has to be there.
Are we at the beginning of any earnings cycle or revival in any of the large sectors? Because earnings will come up, prices will catch up.
I would say so. Because of the corporate taxation rate which has gone down, I would say that we should see 1 year from now, if I have to vote, that will we be better off or will we be worse off? I am willing to put my neck and say that we will be better off.
You've not liked staples, but you've said that don't rule out discretionary.
I am saying just be bottom up. Just because it is a quality name, just because it has done well for the last 5 years, just because someone very intelligent is saying that it is a good buy, just don't believe all that, is what I am saying. I am saying you have to develop your own conviction. Because on borrowed wisdom, borrowed knowledge or borrowed hard work, you can only do this much. If you have to do this much, then you have to do it yourself.
A common friend always says, Mr. Junjunwala, that tips are always hazardous to health.
Absolutely.
So I'm not walking on that path, but I'm going to ask you one big macro question before we wrap, which is interest rates. They play a very large role in equity markets or creating liquidity. In last 10 years, the trend for interest rates has been structural down.
Sure.
It's negative interest in Europe now. American rates have come down from 5 to sub 2%. If interest rates, they gradually start inching higher, whether this year, next year, or after that year, we don't know. But if the direction is higher, what will happen to equity returns?
So a lot of money, there are two ways to look at it. A, if the interests are moving up, which means the real economy is doing well. So in the early cycle, it doesn't impact equity. Secondly, if interest rates move up, so trillions of dollars which have gone into bond money, they will look for a better house. And part of that money may shift into equity. When interest rates become a real worry, when you have a real big inflation, and the expectation is that interest rate will rise dramatically, and it will impact earning. At least I don't see that situation in the next 12 months. And 12 months is a long period of time to make predictions these times. I don't see that situation happening. And whenever that situation happens, you and I are here, we'll talk.
What keeps this passion going? What gets Madhu Kela going in the morning to identify that idea, even though that may not be the financial need of Madhu Kela?
It is just the love for the subject, because you just want to, after a point of time, you just want to excel in something. So did Sachin Tendulkar need money to play cricket? No, he didn't. He just was excelling. Does Amir Khan needs money to make movies? They have all enough money. A lot of entrepreneurs have got enough money. You just want to excel. You just love the subject so much that you are very intrigued by your own mistake. And I am so, I must say, I see so many opportunities now because I don't, as you rightly said, I don't have that pressure on my head that someone I have to do ABC or ABC NAV or this that all that pressure is not there. So life is very, very interesting, very fortunate. God is very kind that now you have a very clear mind to focus on the subject you really love. So a lot of people ask me, what is my hobby? So I always say, God is so kind that my work and hobby is same, which is investing.
Wonderful. So just one more question. I'm tempted to ask you one more question. I'm taking the liberty of asking this one more. The success for a fund manager is always measured in money or returns. That's a score.
Yeah.
So what is your measure of success? How will you say, look, I was passionate, I got it right. What is that benchmark? Is it money? Is it return?
I think it is quality investing now.
Wonderful answer.
It's basically, it's just not money, because you can trade, you can make money by fluke also. In a bull market, you can make a lot of money without intelligence. Someone gave you a tip in the bull market, sector is doing well. It is the quality of investing, it is the quality of your conviction, and it is the loose ball. Did you hit 6 on that? So, let's say, supposing 20 years back, I identified some company and I bought 500 shares. That is like really getting a loose ball and even not running for 1 run. Yeah. But will I get a loose ball now, and will I really hit for a 6?
And I hope you'll buy more than 500 shares this time.
Absolutely.
So really appreciate it.
Thank you so
very much.